this time just to explain roughly what Tyrone Jackson, the Wealthy Investor Approach, what are some of the numbers that he, not guarantees, but looks at what you can generate. Well, first for a long-term investment, which is roughly about 2 to 5 years is what we look at, you're going to be looking at doubling your money and a little more. And I've got some case examples. You can take a look at that here in a second. And then for the trading side of the thing, which is a little bit more involved, you're looking at 2 to 5% monthly. And that's kind of what he goes along with. And that's what he teaches. And all conservatively, not getting too crazy, not investing in stocks that are penny stocks or any of that stuff. Not that you can't make money with that, but to generate wealth. That's what this guy's teaching, not just the flash in the pan, or not day trading where you're sitting in front of a TV all day or in front of a screen all day trying to figure out when the bumps in the market make. None of that. I'm not doing that stuff. I already got a job, don't need another one. But just to be able to go in and maybe for an hour a month, hour and a half, do a little research and place your trades and stuff. So that's the kind of income I like to generate, the one where there is no ceiling and the one that takes the least amount of time. Basically, I'm lazy, I don't want to work the rest of my life. And I'm willing to work really hard right now so I don't have to later. That's kind of what I'm going for. Alright, thanks again. I just wanted to share that with you. And I'll be showing a few case studies of just some stocks, where they were at, where they're at now, and what kind of money you would have made 5 years ago, and what kind of money you'd be looking at maybe 5 years from now. And yeah, so let's check that out.
Okay, we'll take a look at some of these stocks that when you learn how to pick the right ones, some kind of money that you can make. Here we'll start off with the Home Depot. We've heard of them before. You had bought 10 shares at $133 a share 5 years ago. Would have cost you $1,330. Today those shares would be worth $3,170. Now if you had put 100 shares, bought 100 shares 5 years ago at $13,300, today would have been worth $31,700. And if you really had some money back then, 5 years ago, $130,000, today would have been worth $317,000. Okay, there's one example there of just making money by it being in the stock and you're not really doing anything with it. Okay, the next one here is MasterCard. MasterCard, yes. You buy 10 shares, which would have cost you about $900 5 years ago. Well, today, those 10 shares would be worth $3,830. Or if you had 100 shares, it cost you $9,000, you would have made $38,300. And 1,000 shares at $90,000 today would be worth over $383,000. That's quite a bit of growth. That's double and then some. Okay, we're taking a look at this last example. And again, this is not including the dividends that each of these companies pay out as well, but this is just the growth. So 5 years ago, if you had $770 invested into this company, today would be worth $2,420. If you had bought 100 shares, cost you $7,700, today would be worth $24,000. And if you had 1,000 shares, would have been $77,000. I got the comma in the wrong place there, but today would be worth $242,000. That's a long-term investment, and that's the kind of money you can make just having that sitting and growing over time. That's how you double your money. Okay, the next part requires more financial education and more investment. But here's 2 simple trades and how they can work and how simple really they are. But the first one's covered calls, and that's where you go out and you buy 100 shares of a company, and then someone's going to pay you like a deposit, but it's a non-refundable deposit for you just to hold on to the shares and don't sell them to anybody else. And at the end of the agreed upon time, they have the option to either buy them from you at a higher amount or for you to keep them. And if you keep the shares, you just go and do this again the next month. That money's non-refundable. You keep that money. It comes in your account a day after you make the agreement. This would be an option. Okay, the next one is volatility trading. And that's basically when a stock goes up and down in the run of a day or 4 or 5 days. So what we're going to do, we go and buy shares, and then we're going to turn around and set the software inside of our account to sell those shares at $1 higher. So here'd be an example. If you had 50 shares, and then the stock goes up $1, $50. If 100 shares, stock goes up $1 and you sell it, $100. 1,000 shares, $1,000, etc. Get the idea. And you can do this 2 or 3 times a week. So there you go with the long term, 2 to 5 years. You can actually get started with as little as $100 because there is no minimum to open up an account with any of your financial institutions that you use. But for the trading now, you're going to look at $5,000 to $10,000 to get into that game. That's roughly the amount you're going to need. And that's how you double your money and how to get the 2 to 5% monthly ROI. Now, I do urge you to actually check out his site and all of his information himself. Get it right directly from the source. And that's how